Hi guys, welcome back to Options Advantage. So in today's show, we're going to go through a couple of interesting things. So first, we're going to go through some market movers. All right, guys, so I know we've been away a little bit for the long weekend, so we had some movement in the market. I'm going to go through the two that I think move the most based on their headlines. So we're going to go through Netflix and Amazon with you guys. Money work. All right, so I'm just going to share my...
Hey guys, look like we lost Masi there. I think she hit the wrong button when she went to share the screen here. But don't worry, guys. If you guys can hear me out there, definitely go ahead and put in the chat. Press one in the chat if you guys can hear me. We got Masi back, bringing her back.
Sorry about that. I had a little mouse clicking action that messed me up. So let's go ahead and take a look at what Netflix was doing today. So some of you may or may not know Netflix did have earnings report yesterday. So after their earnings, they did beat on revenue. And then they also announced that their subscribers passed 200 million in 2020. So Netflix did run after hours. You can see here, had a huge run after hours after it reported its earnings. And then today as well, we see Amazon. Netflix continued a little bit. It did have a little bit of a consolidation period holding that 576. Currently, Netflix is at all-time highs right now. You can see it's continuing to move above the next high. We can see Netflix going to 590 and even 600. What I pay attention to when I see a stock at all-time highs is I actually pay attention to the open interest and volume on the strike prices. So if you take a look at the 600 strike price here, you can see that there's a lot of open interest, a lot of volume here. And then if we add the open interest, we can see that, again, a lot of open interest, a lot of volume on that 600 strike price as compared to some of the other strike prices. You want to pay attention to the psychological levels. So I'm going to be watching Netflix at 590 and then 600. And then from there, we'll see where it goes. Like I said, it's currently at all-time highs. So whenever a stock is at all-time highs, I do pay attention to the open interest and volume on the strikes. And if you pay attention to the 4-hour chart, you can see that Netflix is now starting to break out of kind of a consolidation period. So you can see that it consolidated in between 567 and around 470, it looks like down here, 465. It's starting to break out of that now. So we can see a continuation upwards for Netflix just post earnings. That is what I think will happen with Netflix. Now, next, we have Amazon. So Amazon. So Amazon today also announced their subscriber numbers for Amazon Prime. And they had about, I believe it was 142 million subscribers for Amazon Prime. And they stated that they're seeing a lot more longer term subscriptions as well. So Amazon did move today. So let's go ahead and take a look. So as you guys can see, lots of support and resistance levels still continuing to move on Amazon here. I do have a level at 3256, 3255, and then 3256 on Amazon. Above 3256, we can see some upside to Amazon. So you can see here, 3256, and then there's a slight gap fill to around 3268. And then 3280 on Amazon. So that's what I'm looking at for a little bit longer. Obviously, this is the hourly time frame. So make sure if you're day trading, you want to look at some of the smaller time frames, especially since it's towards the end of the day right now. But if you're looking to swing Amazon or anything like that, I would definitely wait to see if it's able to break the 3256 level and move up after that 3256 level on Amazon. So Amazon was a nice mover today. Netflix was a nice mover, good catalyst behind both of them. So we'll continue to watch these two throughout the end of the week. Both of their catalysts are strong catalysts, and after earnings, we do see some more movement throughout the upcoming weeks on those stocks. So both will continue to be on watch. Now, what we're going to go through next. So today, for options learning, we're going to go through implied volatility. So implied volatility plays a huge part in your options trading and how your premium is priced. So let's go ahead and go through that. All right, so implied volatility, otherwise known as IV. So what IV is basically it's kind of a projection of how much and how fast your stock is predicted to move or is likely to move in its price. It's not going to predict the direction that it's going to make that move. It's just predicting how fast, how soon it's going to make that move or not. It plays a huge part. Like we went through theta yesterday. Last week we stated that theta plays a huge part in how your premium is priced. IV plays an even bigger part in how your premium is priced. So all of these factors contribute to your premium price. So make sure you understand how IV works. So when it comes to IV, usually IV fluctuates based off of news. So underlying news, upcoming rumors, earnings, court decisions, whatever the case may be, any news or catalyst that could potentially is rumored for the stock or upcoming on the stock, it's going to fluctuate your premium. The IV is going to be a little bit higher. So you'll see stocks, for example, Netflix earnings. Netflix before earnings, IV was a lot lower as compared to right before its earnings. IV was a little bit higher. You could tell that Netflix's premiums were kind of jacked up. So if you pay attention to its earnings seasons right now, so if you pay attention to these stocks and how their IV is currently, and then the week before earnings, you'll see that their IV tends to be a lot higher. And because of that, their premium prices tend to be higher as well. Another thing that you should pay attention to is usually IV is increasing in bearish markets and decreases in bullish markets. It is basically directly influenced by supply and demand. So if the demand for a stock is high, your IV is going to be high, your premium prices are going to be higher. Demand for a stock is lower, IV is going to be lower. It's not going to be, the premium prices are not going to be as expensive. Another thing that you should also understand is that once that news or rumor or whatever thing comes out, that catalyst is finalized, IV usually gets crushed. What that means is if you're, for example, looking to play a stock during earnings, you'll notice that IV for earnings is really high. Premium prices are high, but once that earnings comes out, whether it's good or bad, IV drops. IV drops, and for the most part, those premium prices drop too, unless it's a huge move on that stock. So you really want to pay attention to that as well, because if you try to play through earnings, and this is why I recommend never playing through earnings because of implied volatility, because the fluctuation of the price is so great, the IV moves in such a great percentage, especially if they beat or lose on earnings, you'll definitely see some movement. And because of that IV fluctuation, it crushes your premium if the stock isn't able to beat earnings, or even if they are able to beat earnings and it moves too much throughout that week. So if you're looking to play earnings on a stock, don't play the same week. I don't recommend playing earnings anyways because it's a gamble. But if you are looking to play earnings on a stock, definitely buy a couple weeks out so that IV doesn't affect your premium price as much towards the end of its expiration date. So a lot of people always ask me with implied volatility is what is a good implied volatility percentage? There's no set answer for that. Every stock has a different percentage implied volatility, different kind of average. So for example, Netflix kind of has an average of around 30, 35, 40%, whereas Tesla has an average of around 80, 75%. So there's no really set percentage on what a good IV is. You really want to pay attention to the stocks that you're watching, and then pay attention to how their IV is prior to any news, prior to any earnings, and then before that earnings or rumors coming out or product releases, pay attention to how that IV increases, because 90% of the time that IV is going to increase whenever there's earnings, and you'll see greater premium prices on that stock. So for example, Tesla has earnings coming up, Amazon has earnings coming up. You'll start to see that their premium prices are extremely high right before their earnings report, and that's due to that IV percentage increase, because people are anticipating that the price of that stock is either going to increase or decrease in a shorter period of time, because of that earnings report. So IV is extremely important. Make sure that you guys understand it. It does take time, obviously. I'm not going to go through the equation for IV because it's a really complicated equation, but it does have to do with one standard deviation, which calculates the range in which the stock is going to move in a specific time frame. So I wouldn't worry about that. Just pay attention to pre-earnings, post-earnings, pre-news, rumors, and how your IV is going to affect your premium price, because that is what you want to pay attention to when you're trading options.
Excellent. I think we have a great question here from the viewers. You know, one of the things we'd like to do at Options Advantage is definitely get questions from the viewers here on the education, especially. So we have a question here. What would you consider too low of an IV for an options trade?
So under 30%, I think is too low. If you pay attention to some of the stocks with really low IV, they have really low volume. Your premium price is not going to fluctuate as much. And even if the underlying stock does move, because the IV is so low, your premium price is not going to fluctuate as much with it. So below 30%, again, depending on the stock, but below 30%, I would say.
Perfect. And just to kind of counteract that, what would be maybe like an extreme IV on the
So
opposite side?
like I said, it really depends on the stock. But for example, Tesla, I've seen IVs of over 100%. Anything over that, I think, is really, really high. For stocks like Apple or Microsoft, anything over probably 50, 60% is considered high for those stocks. So it really depends on the stock. The higher volatility the stock, higher IV. Lower volatility stock, it's going to be lower by IV.
Excellent. And the last question, at least from the education side, another great question here. If IV is very high, can it still be worth it, or does it eat into the price like theta?
So it doesn't eat too much into the price like theta, because theta is dependent on obviously the expiration, so it's going to crush your premium more. The IV is not a bad thing. So if you utilize IV properly, it's a good thing, because it can move the price of your premium greatly, either on the upside or downside, depending what you're playing. The only thing is that I would really pay attention to, if you're playing through the news, that is when your IV will get crushed, because once that anticipation ends, once the demand for that stock ends, IV is going to crush your premium price.
Perfect answer. So I think now would be great. How about you show us like on maybe how you would approach maybe finding an option that has good IV or a kind of an IV that kind of interests you?
Sure. So let's go ahead and take a look here. So I'm just going to kind of show you guys Netflix here, because it had its earnings. So, and it's still moving. It's crazy. It's already almost at 590. You can definitely see six. All right. So, excuse me. So how you add IV percentage, so it's right here. So this is Netflix IV percentage, excuse me, it's about 55% right now. If you also add, you can add the IV to the individual strike prices as well. So here are the individual strike prices IV as well. So as you can see, the further out of the money you get on the call side, IV gets extremely high. So pay attention to your strike price IV. So obviously you can see that 600 price has a pretty decent IV, 50% IV. This is pretty high for Netflix, especially down here, this 100% IV, that's going to really affect the premium price. So this is how I pretty much approach implied volatility. So when I see a stock, or when I'm anticipating a stock has a news coming out or earnings, I take advantage of that IV fluctuation. So pre-earnings, pre-news, if you see, for example, Tesla has a battery day coming out, or you see, Amazon's reporting numbers, Disney reporting subscriber numbers, whatever the case may be, people are anticipating this news. People are anticipating a move either on the upside or downside. You want to take advantage of that. You need to pay attention to where that IV is sitting right before that news. It's going to be a little bit higher. So how I approach it is I'll play right before the news, because I'll take advantage of the higher IV, because that's going to move your premium price. That's going to help that premium price fluctuate as your stock is moving as well. If your premium price doesn't move in conjunction with your strike price, you're not going to make money on that contract. So pay attention to it. IV is not a bad thing. It's just that people don't understand how to play it. So make sure that when you are anticipating anything like that, you're playing before and after. Afterwards, obviously, like I said, IV does drop back down to normal, but before, with that IV, you want to be careful. You want to play closer to at the money strikes. You don't want to play too far out of the money, because clearly you can see with Netflix here, out of the money strikes are a lot higher IV versus your at the money strikes. This is going to be less risk, obviously, compared to your out of the money strikes. So before your news, you want to play it. You want to take advantage of the at the money in the money strikes. And then after the news, once this IV dies down, you want to play the stock just as normal. Still with Netflix, because it's the same week of earnings, IB still fluctuating a lot. It's still a lot higher than what it normally is. So obviously, with that comes your higher premium prices as well on Netflix. So that's how I approach implied volatility, and that's how I utilize it when I'm trading options.
Excellent, excellent. Let's get into some viewer questions, right? Let's go ahead and put some option tickers, guys. Get some questions in there. You guys got Masi here, so ask us some questions. All right, looks like we got a question here. We're looking at Rocket, and if we can look for long-term calls.
All right, let's take a look. All right, so for long-term calls, you want to look at higher time frames. So I always look at the daily time frame.
Can you do me a favor, just share your screen right quick?
Oh, I thought I was already sharing. Sorry.
No worries.
There we go. All right. So I always look at the higher time frames, like I said. So it looks like right now it's just kind of in a consolidation period, not really much happening. You want to wait for long-term calls to see if it breaks a solid level of resistance. Or it touches a bottom. So the bottom here looks like it's around 1780. So if it comes down to 1780, it would touch a bottom here and then could potentially bounce back up to $23. Otherwise, I wouldn't touch this in a consolidation period unless it breaks this $23 range. After that, you can see $24, and then it does have a lot more room to move up into the $30 range, but I definitely think it needs to break this $23 resistance prior to me touching it. I don't like to buy long-term calls on a stock that hasn't bottomed, one, and that is just kind of trading in a consolidation period.
All right, excellent. We got a next one here. It's going to be solo. We're trying to check out a particular one here. We have a 410 strike. We're looking at the February 19th time frame, and it's showing as it has a 10,000 open interest. So kind of just take a look and kind of just see if it seems a little interesting. What do you have your opinion on that one, Masi?
All right, let's take a look. So, oh, this is Netflix. I'm on the wrong one. I'll go to solo. It's at February 19th. It's the open interest. All right, so am I looking at the right ones? What is that right? Solo 410 call.
It looks like it's a $10 strike.
Okay, so the $10 strike does have higher volume and open interest on it. Open interest is higher than volume, which means there's a lot of trading going on that strike, which is a good thing. So looking at the stock itself, it does look like right now it's pulling back. Looks like it's pulling back right around to that support level of around $6. It could pull back more. If not, and it holds the $7 range, we could definitely see it pull back up to that $9, $10 range, because it looks like the $9 is the level of resistance. So you want to watch how the stock reacts to this $6 range, $7 support. And then if it does pick back up, obviously that $10, it's a whole number. The $10 levels, $5 levels are psych levels. So whenever you see stocks that do have higher higher volume and open interest on those levels, they tend to move to those specific levels just because people are anticipating the price move and people like those psychological whole numbers. And that's when you'll start to see selling around that $10 level or profit taking.
All right, excellent. Let's go ahead and get to the next one here. Let's take a look at AMD. It looks like they're reporting next week. So what do you think about these options and how the stock chart's looking to you?
So this is AMD on the daily chart. I really like AMD for pre-earnings and post-earnings. Personally, I do think AMD has the potential to beat their earnings and the potential to hit above 100. I think a lot of people have been anticipating AMD just to hit above 100. And what it looks like here on the daily chart, and you can see it touches perfectly to this level of support around 87.50, perfectly touching this $87 support here. What we could see happen is it does look like it's starting to slowly bounce off of this level of support here. What we can see is if AMD continues on the upside pre-earnings, if people anticipate that they're going to beat their earnings, we'll see AMD hold this level and continue to the upside. Pre-earnings, it could hit that $100 range just because of that anticipation for their earnings. So I do really like AMD pre-earnings. I am anticipating the $100. I think we'll get the $100 before earnings reports, but like I said, it has to hold this support level on the daily chart.
All right, let's go to the last one here. Just one more. I'll sneak one in. What about Snap?
Snap.
Snapchat.
All right. Snap looks really good too. Let's take a look. So this is the daily chart here. Looks like Snap does have a support level right around $48, I'd say. It does look like it kind of touched that support level, and now it looks like it's bouncing right back off of that support level. And just like kind of AMD, if it holds this $48 level here on the daily chart, we can see Snap, I forgot what stock I was looking at, Snap to continue on the upside as well. So again, needs to hold this 48. Looks like it held it, starting to bounce back up. See how it opens tomorrow. If it does open above this, above the close today, we can definitely see more upside back to the high on Snap. Snap last year, I think, are the last earnings they reported, they had a huge run after earnings and pre-earnings. So can definitely see some upside to Snapchat as well.
All right, excellent. Let's go ahead and wrap up.
All right, guys. So that's it for today. Thank you guys for joining. We'll be back Wednesday. Oh, no. What day is it today? Friday at 2 p.m. Eastern. So join us again on Friday. And yeah, I hope you guys enjoyed this. And I'll see you guys on Friday.